Hey, what is up, tycoons? What up, traders? Super excited for today's video, breaking down this 50K portfolio again. We have the portfolio breakdown right here. We have sector allocation, asset allocation, and we can see that currently the annual dividend is about $3,753, which is about a 9.8% yield on the dividend stocks that I'm holding. Okay, now if you look at the asset allocation, right, we have 61% is put into dividends. All right. Got about 1% in crypto, 10% in water, 16% in, some ETFs, 1% in biotech, and close to 9% in growth. If we look here specifically at what sectors, okay, 21% in consumer discretionary, about 8% in tech, 1% in cannabis, 1% in industrials, 4% in clean energy, 42% in energy, 10% in essential utilities, and 11% in index, right? Now, energy has been my big hedge, okay? It's no secret that it's been a bear market this year, and it's been very, very brutal and tough for a lot of stocks, okay? But energy has outperformed the market very well. So I still have a very large over position in that. I'll be looking to trim that position as the year progresses, but we're heading into winter, and generally winter prices tend to go up. And also energy stocks are having a lot of earnings, and CVX, ExxonMobil, right? They just reported record earnings, really killing the game when it comes to those. All right. And then you can look at the specific individual stocks here and see how much of it is my actual portfolio. But we'll just go ahead and jump into the actual positions here, and you guys can see what is up, what is down. And you can also see the annual dividend. Okay, so the stock that pays me the most dividends is ZIM. Okay, this is integrated shipping services. They do a lot of international shipping, right? So if you live anywhere near a port, or like a port city, you generally will see containers that say ZIM like being transported around on these 53-foot semis, right? Or these big old semi trucks. Okay, they're using these shipping containers that came from the port. They're transporting them somewhere else, and then eventually they go back to a port. All right. So the yield on that one is 117%. Okay. They pay out $27.10 for each share that you have. So currently I only have about 110 shares. And it was down this past Friday. I'm down about 10% on that position, but again, it's really holding that for the dividend. So I'm not telling you to buy this stock or buy any of these stocks. I'm just breaking down why I have certain positions and what positions they are. Okay. A lot of times it's really risky, and it's a little bit of a red flag when you see stocks paying such a high dividend, right? One thing that you could think about is, okay, well, maybe, they need to attract investors because they need some money. So they're paying a high dividend, or, whatever it is. So I'm not surprised that I'm down on this position. I do think that the stock market as a whole is going to have a very nice rotation after the midterms. If you look historically, from November to June after the midterm elections has been green in the stock market, the S&P 500, and from November to November, historically after the midterm elections, it's been green as well. So I'm just gathering some positions. It's a small position. It's about 5% of the portfolio. So it's definitely not my biggest position, but I am looking to increase it just to, get some more dividend pay off of that, right? Now, if we come down here and look at this one, okay, we have KMB. This is a consumer discretionary stock. And I have this for the dividend. Okay, they pay a pretty decent dividend, and a much more realistic one, right? We have 3% right here. So that's bringing in about $232. I'm up about 8% on that position currently. So that would be about $468 that we've made. It's about 13% of the position. Let me know in the comments down below if you guys would like me to break down any of the specific stock positions, right? I do a lot of technical analysis on this channel, and I'd be happy to give you guys an update on the charts and whether there's any buy or sell signals for each one of these specific stocks in case you're interested, right? And then Gush, okay, Gush is the biggest position and the one that I'm up the most on also. Okay, so I'm up 63% on Gush. And we've made about 7 grand off of this one. It's 42% of the portfolio, and it also has a nice dividend of 2.46, annual dividend. So that's bringing in about $487 a year, right? If we look down here at SpyG, SpyG also gives you a dividend. Okay, it's pretty small. about a 1% yield. But $52.88 is what I'll be basically bringing in from that, right? I have 100 shares of SpyG, and if you notice, I pretty much have 100 shares or more of every stock except KMB. KMB is a little bit pricey, and I would just be a little bit too overweight in KMB to feel comfortable. I may start to build that position, right, as I make some profits. If you look down here, I have a very decent amount of cash. And the reason being is because I like to sell options. Okay. So not only do I do the dividend portfolio, but I sell some options, right? And what you can do is you can sell cash secured puts, okay, and covered calls, right? Now, the only stock that I'm in the wheel on currently right now is going to be Bingo. All right. I closed some few options last week. And I'm looking to see, how I can use that cash, to generate some more income. Okay. That cash available I have. So, as of this Friday, I collected $48 in premium. Nothing huge, okay? About a 0.08% of, the account. So again, nothing huge, but I like to sell options pretty much every Friday. And if you do this over time, last time, I think like last Friday or the Friday before that, I was able to get like 1 or 2% of the portfolio, a percentage gain. And that's just a nice little cherry on top, right? And you can use that cash to buy more shares, or you can use that cash to continue selling cash secured puts. So for Bingo, had a pretty red day a while ago, right? I think about 2 weeks ago. And when it's very red, it's a good time to sell cash secured puts, okay? Because the put premium is going to be a lot higher. So I was able to sell the 1.5 strike expiring in November for 9 cents. All right, so that's about $9 in premium that I was able to collect. Okay, its current price is 0.04. So I can close that at any time if it comes down to like 0.01, right? I can just close that and then free up that cash. But it's not a lot of cash, right? It's only about $150 that I have in there, because if you buy 100 shares at $1.50, that's only $150. Okay. Now here I sold the 4 strike on Bingo when Bingo was up 20% in one day, right? I dropped a video on Bingo, gave you guys an update on that one, and it was up very, very massively, and that's a very good time to collect premium, right? So I sold the 4 strike that expires in January of 2023 for $17 in premium. I sold a couple of those because I own a couple hundred shares, right? If we look at the position of Bingo, um, we'll take a look real quick. Bio Nanogenomics, this is my biotech play. Okay, I have 200 shares, so I was able to sell 2 covered calls against it, up about 8% on the position, but that's largely due to the big rally that I had last Friday. It was up close to 7%. All right. Now that's basically it. That's my breakdown. If you guys are interested in these, make sure to let me know so I can keep making them for you. Smash the like button and subscribe to the channel if you guys are new as well. I'll be posting videos every single week, whether it's this dividend portfolio that I have running, or my technical analysis. I'm putting out videos constantly throughout the week, multiple videos from 3 to 10 videos a week, sometimes more, up to like 15. Just depends on how I'm feeling and how much time I have available really to make some content. Okay, so appreciate it. Thanks for watching, and I'm out.